You're listening to Accounted For, the Canadian podcast that explores the intangibles of every career. I'm your host, Daniel Lee. Hello, ladies and gentlemen. Welcome back to Accounted For. This podcast is brought to you by OMD Ventures, my platform focused on everything human capital investing. Check out weekly articles on redefining the status quo in work and life, as well as my daily learnings on becoming healthy, wealthy, and wise, all on my website, oldmandan.com. So subscribe and be part of the community. Also, please help the podcasts and your friends that you love by telling one friend this week about Accounted For. It'll make my week as well as your friends, I'm sure. Also, what would really help me improve the podcast and the overall OMD Ventures platform is to learn who you, my listeners, are. I made a survey that I would really appreciate if you filled out. It should take no more than 5 minutes, and you can remain anonymous. Just provide me some valuable intel on just your kind of demographic, what you do, why you even come on, and things you enjoy about the podcast. And so I'd really appreciate it if you can make the time to head on over to oldmandan.com/podcast. I provide all the links to the survey and the newsletter in the show notes below. And so today's interview is with Francisco Lung, the managing partner and portfolio manager of Coin Capital. Coin Capital is the investment management arm of Coinsquare, and they're creating products where retail investors like you and I can just invest in companies that are utilizing blockchain technology and other companies that are using kind of more on the forefront of technology. It might not necessarily have to be blockchain, it seems, from what Francisco's telling me. Francisco's career story is one about tenacity and perseverance. He started out in computer science and joined IBM after the pop of the dotcom bubble. And so he's been doing that for about 6 years, and then he goes up to do his MBA to enter the capital markets and the world of stock investing amid the financial bubble popping in 2008. So this is a guy who had to withstand, I would say, 2 crises, and that alone, I think, requires a lot of tenacity to just go through that and just live through it. And he had a unorthodox background breaking into the public markets, and so he talks about how he just leveraged the Rotman MBA alumni network to grab as many as like 120 coffees in 3 months. That's insane. And that's just how many coffees he grabbed. So then I can only imagine how many emails he had to send out. We talk about the value of building relationships and how continuing to focus on cultivating these meaningful relationships actually helped him become a portfolio manager in his dream role. And then we also go into the decision-making process he made in leaving this high-paying world of finance to enter the ambiguous world of startups and cryptocurrencies, and what really propelled him to make such an uncommon and difficult decision. This was really a fun conversation, and Francisco is also just very passionate, I think, about helping people in their own career journeys, and you can just really sense it when he talks about his stories and the kind of thought process that he had as he was making different decision points. And I really do hope that you can extract as much value out of it as I did when I spoke with him. So here is my conversation with Francisco Lung. Hey everyone, welcome back to Accounted For. Today on the podcast we have Francisco Lung, the managing partner and portfolio manager of Coin Capital. Hey Francisco, thanks for coming on the podcast.
Hey Dan, thanks for having me.
Yeah, no problem. And so for our listeners, they might have gotten a brief idea of what Coinsquare was through Martin Houck's episode 31, and Coin Capital is affiliated with Coinsquare. So can you kind of go through how that affiliation works, as well as what does Coin Capital do then?
Yeah, absolutely. So as some of your listeners probably know, Coinsquare is really on its way to becoming a 21st century financial institution focused on around the digital currency and digital asset space. So really as a strategy to really build out that vision, part of it is really being able to access a lot of the traditional services and offerings that a bank would have, and then offer that out to our clients. So that's kind of how the Coin Capital organization or subsidiary came about. So we are the asset management subsidiary of Coinsquare, in that we have 300,000 clients on the Coinsquare platform, and a lot of them are looking to diversify away from the traditional digital currencies, really into products that could be on the peripheral, like a blockchain ETF, for example, or a venture capital fund. So the goal of Coin Capital is really to become this leading technology asset manager that can cater to all Canadians and offer a diverse set of product offerings. Everything from investment products in the seed stage to venture capital to private equity, eventually to mature companies that would sit within an ETF. And that's kind of our goal. We feel that in Canada, that's very much missing. You may have some venture capital companies that are creating products for accredited investors, high net worth clients and institutions. But for the general retail, consumer and investor, there really isn't something for them. And you may have some of the larger asset managers who offer a broad variety of funds, and then they will launch a technology-focused offering, but we don't feel that they truly have the expertise behind it. Whereas within Coin Capital and Coinsquare, we are a true fintech company, and we're an asset manager within that. We have developers that are in-house. We live and breathe technology. And my earlier background was in computer science, so that really brings about some authenticity in terms of how we think about investment products, the type of funds that we're going to launch, and so we want to become that all-in-one solution for a Canadian looking for technology investments.
Got it. So I guess that's actually really interesting to hear, because I think the initial bias I had was because of Coin Capital being part of Coinsquare, that is it a crypto only fund, and so are they only investing in just all the different kinds of cryptocurrencies? But it seems like you're just hitting the full technology bucket altogether. That's
right.
The goal, at least.
That's right, and we get that a lot. And initially, the word Coin Capital, when someone hears about that, they immediately think that maybe it's really just cryptocurrencies. But yeah, that's not it. We're offering that broad suite of products. At some point, we'll do something on the cryptocurrency side. We actually have 2 indices that are live for the last 12 months, where we're tracking the top 4 cryptocurrencies on an equal weight and market cap weighted basis. So these are index products that eventually we could structure fund offerings around that, whether it's an ETF, whether it's a private fund for someone who wants exposure to cryptocurrency, we could offer that. But it's just one of our products that we have, and we intend to really capture the entire spectrum of technology investing.
Got it. And yeah, I think there really isn't any way for other just retail investors to actually take part in any private deals, at least in Canada, from my knowledge. I think in the States there's a few who are allowing people to try to be part of private equity kind of deals. And yeah, mostly they're just tech ETFs that are just basically just tracking a NASDAQ, or they're all market cap weighted. And yeah,
and if we look at some of the other ETF providers in the Canadian space, and again, they seem to be just chasing whatever theme is the hot theme of the month, like a flavor of the month. So one month they'll launch a marijuana ETF because that was everybody's talking about that, and then a month later it's a blockchain ETF, and a month later it's something else. Whereas our focus is 100% going to be in technology. We're going to bring about offerings that are unique to the marketplace. So hopefully, that's something that Canadians can eventually access for as we launch our first ETFs. In September of 2018, so last year, and the response has been very, very positive.
And to the listeners, this is an informational podcast, not an investment podcast. So don't take any of this as investment advice. We're just talking about things that are very fascinating and interesting. You mentioned a blockchain ETF. What goes inside a blockchain ETF?
That's a great question.
Yeah, there are public companies that are blockchain companies.
So that's a great question. So if you look at some of the other blockchain funds that are out there that our competitors have created, what they would invest in would be cryptocurrency mining companies that are publicly traded. So there's a few of those out there in Canada. There are companies that have more or less changed their business models. So I don't know if you heard about this last year and a half ago, where Long Island Iced Tea Corporation changed their name from Long Island Iced Tea to Long Island Iced Tea Blockchain.
No, I've never heard of that.
And then the stock just shot up significantly, despite the fact that there was no business model. They basically was a beverage company that decided to pivot and become a blockchain company overnight by changing their name. and immediately everybody was jumping on a bandwagon. Oh yeah, there's a new blockchain company in town. So those are some of the crazy types of companies that are being packaged into some of these other blockchain funds. So we've gone a very, very different route, something that's more protected for our investors, something that's more defensive, longer term thinking, and more sustainable, in that we went through a patents approach. So our fund is actually called the Coin Capital Stocks Blockchain Patents Innovation Index Fund. And what we do with that fund is we partner with an artificial intelligence provider. And what that partner does for us is every quarter they look through the global patent databases of companies who have actually issued and filed blockchain patents. So these are legitimate companies that have put the capital to work to really secure that intellectual property, and put in the research and R&D. So these are companies like JP Morgan, who is launching their own internal cryptocurrency. These are companies like Walmart, who is using blockchain to really simplify their supply chain processes, and using blockchain to be able to track a produce from farm to the end grocery store, and knowing exactly where that orange, for example, has been every step of the way on the blockchain, fully transparent to everybody, no way to really hack into it or change the information around it. So our blockchain fund actually invests in those kinds of businesses, mature companies that are seriously looking for ways to improve their internal processes using blockchain technology. Another example that your listeners might know about is a company called Live Nation, who owns Ticketmaster. And Ticketmaster over the years have been under a lot of pressure to figure out how do you prevent the scalping market from really taking over their client base, the secondary market. They're actually using blockchain to be able to track and put tickets essentially on the chain, and keep it in a secure, transparent way to minimize really that scalping impact. So these are the types of companies that we're investing. So not a direct pure play per se, where it's like a cryptocurrency mining company. We're actually putting into capital for blue chip companies that are putting real R&D and research efforts into blockchain.
Gotcha. And the way that you would, I guess, understand the involvement, the extent of involvement these companies have in blockchain, I guess it's mainly from public disclosures, right? Since these are big public companies.
Yes, correct. Public disclosure, and also being able to look through the patents, actually digging into the database and figuring out is this legitimately a blockchain patent? Because when a company files a patent, it's not going to say necessarily blockchain on it. So it's looking for a lot of specific keywords and processes, for example, distributed ledger technology, or something to do with a decentralized process that's around a network. So very specific keywords, and that's what our artificial intelligence partner looks for, to make sure that what they've found is actually a true blockchain patent, as opposed to something completely different. So that's why that partnership that we have with this AI partner is extremely important to how the fund really operates. And we did a lot of discovery with this company in when we were constructing this fund, to really make sure that we do all the testing. We went back 5 years to make sure that the companies that we're finding in these databases are actually legitimate blockchain patents that these companies are offering. So there's a lot of process that were in place before we get to kind of the final product.
Got it. And choosing companies that have the blockchain patent, is it because there's the theory, or at least a thesis, that once they implement blockchain, they're going to be able to grow much faster or more effectively? What is the thesis behind?
Yeah, so there are actually two ways to look at it. But I'll start with the fact that intellectual property, the protection of a company's intellectual property, and the monetization of that intellectual property is becoming more and more important in today's world, where a lot of technology companies are so focused on creating innovation and making sure to protect it, so that the next company can come around and really start infringing on that product offering. So self-preservation already is kind of one factor to it, in that if that technology is your bread and butter, you need to do whatever you need to do to really protect that and monetize that, to really defend your moat, to make sure that your competitive advantage is really being able to sustain on a go-forward basis. So right off the bat, companies that are filing for patents in general and protecting their intellectual property is already strategically protecting their competitive advantage. So that's kind of one thing that I would say right off the bat. And monetizing it, it's kind of the next step of that process. But what I would say with blockchain specifically is that a lot of the financial services companies today specifically has seen that blockchain has come a long way in terms of disruptive use cases. Whether it's simplifying a lot of their clearing and settlement processes or cross-border payment processes, companies are finding ways to use blockchain for that. And as of now, I think what we're finding is that banks, financial institutions, supply chain companies, what they're doing is a lot of the processes currently today are very expensive and time consuming because it's centralized. They may have to go to a third party or different parties to find data on their to figure out what their processes are. For example, Walmart. If they're not tracking their own internal logistics and supply chain processes, they may need a third party to be able to track all that data, and they're paying somebody to do that. So by creating their own blockchain technology and private blockchain, they're able to take a lot of these different parties that have kind of centralized databases and be able to create their own decentralized database and really kick out a lot of the middleman that's involved in all these different type of processes. So really from a cost reduction perspective, blockchain is probably the number one priority right now for these companies to be able to figure out, is there a way to kick out the middleman, pay less fees, simplify processes using this technology? So I would say at this current point in time, that's what a lot of these industries are doing, really trying to cut out costs. And when you cut out costs, it goes straight to the bottom line, and you can then see potential earnings growth. But I think that over the next, let's call it a decade or so, is when they could potentially monetize on these patents and on the intellectual property through maybe a licensing deal with another partner. Let's say Live Nation, has these patents in blockchain that could figure out how to track the secondary market and scalping of tickets and prevent that from happening. They could actually license that patent to somebody else who may see the value in that patent, and then you have a new revenue stream. You now have a licensing stream. And then there's other potential opportunities is that at some point they create such a broad portfolio of technology patents, they could actually then sell off that patent portfolio to another partner and really focus on what their core business is while still continue to stay in partnership with that other company. And one of the more recent examples, is not in blockchain, is Fossil, who makes watches, recently sold off their smartwatch patent portfolio to Google. And Google is going to basically take over this patent portfolio, and Fossil can continue to focus on its really core business, which is building watches and making that luxury brand whole. But they just happen to have created these patents around smartwatch that Google really could explore in terms of growing that business. So now they have this partnership in place, and that's kind of how I see that, how blockchain patents could work too. At some point in the next decade, some of these companies that have heavily invested in these blockchain patents could eventually say, that's not really our core business, but we're happy to partner with somebody else who can take these patents and technology to the next level. So there's basically looking, kind of wrapping this all up. So really there are three reasons why blockchain and patents and IP work, is that first, you're protecting your brand, your competitive advantage through innovation and really protecting that type of assets. Second, from a cost reduction standpoint, really using blockchain to decentralize a lot of processes that are out there to drive really earnings growth. And then finally, you have the revenue opportunity to be able to license those products and potentially even sell off that patent portfolio to a partner.
Got it. And, I guess this is kind of where your background as a CS major and also an investor shine, where now you're kind of combining these and being able to see these two different spectrums and also married together. And the first time we met, we talked about how when you were 13, you thought your goal at that point was, I'm going to be a comp sci major. I don't know how many 13-year-olds think about that. And what did you imagine yourself doing with that comp sci major at that age? Was it like the hot thing then? Was it even popular?
That's a great question. Back in the day, let's go back in the day. When I was 13, that was many, many years ago. I think it really came about the fact that I was, like a lot of people today, really interested in new and novel things. And technology at the time was still very much not really as part of our everyday lives as it is today. To date myself even more, the internet was just really coming to life back then. And I remember using the dial-up internet where you're calling into a Bell phone line in order to connect to the internet, and people can't use the phone if you're on the internet, and it was done through a very basic modem in which to download a picture probably took 5 minutes. And I remember that I was so interested in this new technology where you could communicate with people across the world. I remember back then was when chat rooms were very new. I was able to talk to my friends who were overseas, maybe in Hong Kong, in the US, and it was through a chat mechanism that before wasn't available. So I think all of that really inspired me to really take this path to go into the technology route. And for me at the time, I thought computer science sounded like something that I was going to be pretty good at. I was a good math guy, always when I was younger. Having grown up in Hong Kong, there was a lot of intense education that happened specifically in mathematics. So math always came very easily for me. And when I started looking at potential school, universities, Waterloo obviously was on the top of my list in terms of a computer science program, and the fact that they were also very innovative as a university to offer, one of the first to offer a co-op program. So that was kind of rare back in the day as well. I thought, wow, this is like, probably the best route that I could take. It was a program that I was so interested in. I was good at the math behind it, and it offered an opportunity to do a co-op where I could potentially work with various different companies. There were 6 co-op terms during my tenure there. So I think that everything just kind of came together. And my dad at the time was also in technology, so that obviously helped drive a lot of that interest that I had. The rest is history.
Yeah, and I'm wondering, from your parents' perspective, you talked about how previously before that you immigrated to Canada when you were 10, so the same age I did as well, and so I definitely could relate to that. And I found though that I think they call us kind of like the half generation, where we kind of immigrate in, but we come at a young age, where we're now kind of trying to assimilate into the Western culture while balancing the Asian culture as well. And I found that a lot of my kind of peer group, they still had that early pressure of parents pushing them towards like more quote unquote considered stable jobs. And do you think that it was more so your father's background also in technology that kind of got them thinking, oh yeah, totally, Francisco, go down the tech route, it's cool, it's fine? Or sometimes it could also be that I would imagine if it was really hard for your father, they would kind of push you away from it and say, no, it's not really ideal, you should go be an accountant or something like that.
Yeah, I mean, the Chinese culture is very interesting, or the Asian culture in general. I would say my parents were fairly liberal in terms of they would let me do whatever I felt was the right thing to do, or what my interests were. So they never actually forced me down any kind of routes, which was great. Now, did they have kind of inner doubts or inner concerns? I'm sure they did. Another story I have is it was really during the time when I was going back to business school to do the MBA, where my parents were more concerned in that I was trying to make a career switch from computer science into the Bay Street finance world, with really no experience, not a lot of connections in the personal network. Most of my friends were in more traditional industries. They were either engineers or accountants or lawyers or doctors, not really any kind of finance or even startup guys. And I think at the time, my parents were worried that I was giving up a great job at IBM. I had been there for a number of years already. Why are you taking the chance to do something that could fail, that you know nothing about, and you're doing it during 2008, 2009 when the world was falling apart. So I'm sure my mom was very concerned, and she kind of brought that up. I think I mentioned to you during our coffee chat, even my parents' neighbor was concerned because he was a mentor at Rotman, and he had seen other folks from the technical side of the world trying to make a switch into finance, and he has seen that kind of fail. So he was kind of trying to talk me out of it as well. And I'm of the personality that the more you try to talk me out of it, the more I'm going to try to make it happen, just to prove to you that I can do it. But at the time, yeah, I'm sure my parents were concerned, but at the same time, they knew that I was going to do whatever I was going to do, and there was really no way to stop it. And from that point forward, they tend to be, just very supportive. But at the same time, I'm sure they have a lot of inner thoughts about, oh man, is my son actually going to be doing the right thing? He's giving up the safety net of working with a large technology company, possibly giving up 2 years of income to do the MBA, and then trying to make a switch into a career that may not even work out. So I'm sure they had concerns, but things worked out.
Yeah, and as we get, we will definitely go deeper into that. But I think if we looked at kind of the higher level picture, yeah, you did Waterloo Comp Sci, and then for full time you ended up doing IBM for a number of years, I think close to 6 years,
Mm-hmm.
and then you did your MBA at Rotman, and then you did obviously make it into the finance world, and it's a success story where you interned at Claris, and then you went to BMO,
Mm-hmm.
You went to Sentry to go from the sell side to the buy side, and now you're Coin Capital. And the way we kind of go back to your comp sci days, so in Waterloo, like as you noted, there's 6 co-op terms.
Mm-hmm.
So it's kind of like 6 guaranteed short-term relationships in a sense.
Yeah,
and you have to test a lot of different things out. And I remember you were telling me about how you had this one co-op term at a startup, and it was the most fun you've ever had, and that you just loved that co-op term specifically. But then you spent 3 co-op terms at IBM. What made you decide against pursuing that startup, any co-op like that startup world again, and go into Big Blue?
Yeah, no, that's a great question. So my first couple of co-op terms out of Waterloo was in banks. So again, large organization where, there's like so many different levels of management. You're just a, small cog in a big wheel. And then I really wanted to try something a little bit different. So I joined a startup at the time that was trying to do something quite disruptive. It was, we take for granted online payments and how easy we can pay our bills online nowadays. But if you go back, 10, 15 years ago, that was not a very common thing to do. You still had to take your bill, go to an ATM, go to a bank, pay your bills there. And online billing was not something that was very prevalent like today. So when I joined that online bill payment company, it was about a company of about 20 people. There were about 4 of us that were co-op students at the same time, and we all came from different programs in different years, so that was very interesting. So I was, at that time I was in my second year computer science program. There was someone else who was in their first year computer engineering program. Then there were another person who was in their 4th year computer science program, and then there was another guy also in their 4th year computer engineering program. So it was a very diverse kind of group, despite the fact that we were in similar programs with different experiences. Our personalities are very different, but we just all ended up became such good friends in that work term, and working in such a kind of cohesive environment where it was a small company. Everybody knew each other. Everybody worked collaboratively. We all had kind of the big dream of taking this dotcom company to the next level, despite the fact that we were only there for 4 months. But it was so exciting. And then my next work time, I figured, okay, I'm going to try a larger technology company because I worked at 2 banks. I worked at a small startup tech company. I'm going to try a larger technology company. So at the time, I was considering like a Microsoft. I was considering a Cisco. And then IBM also came about. And IBM at the time was such a good organization that really invested in its students. It has such a large student community within where I was. I think we had at the IBM Software Lab, so this is up in Markham, the lab can fit somewhere in 5,000 employees, and I think there were probably 200-300 students, within that whole space. There were students from Waterloo, from U of T, from York, from Western, and any university you can think of. And I really enjoyed that environment as well, in that there was a large student community. There were so many different roles that you could tap into. At the startup, you're kind of you hired for a very specific role because everybody needed to fill a particular purpose. You need to either be a developer or a database administrator or marketing or something else. Whereas at IBM, I think I saw so many potential opportunities to jump into a different role. So even though I did 3 work terms there, every work term that I had was very different. Very different from the other. My first one I remember was was part of IBM DB2. So this is a database team, and working in that team was so different than my next couple of terms after, which was in a kind of a middleware, WebSphere server, web services type environment, and that was all very, very different. And it just so happens that around the time that I was in that second last work term, we were going into a recession. So this was just after September 11th. And the world was scared. And students like me who was about to graduate, trying to look for a job, was also, kind of scared. And I think fear actually, keeps us from doing a lot of things we want to do. And so I think at the time, I was young. I was like, 18 or 20, trying to secure a full-time position. And IBM, because I really enjoyed my time there, and the managers were all great, and they offered me that full-time position before I graduated. I thought, wow, why would I kind of look the gift horse in the mouth? Here's one of the IBM is one of the most well-known brands in the world. Lots of opportunities internally. So I didn't even consider at that point looking elsewhere. So it was a combination of like securing a position in a company that I really enjoy working at, and seeing that opportunity available that it was kind of a no-brainer to me at the time.
And over the years, it seems that your mindset started shifting and you started getting curious, back to that, I think, younger mindset of, okay, I think the fear has been kind of squashed off. But what else could be out there? And you told me about how when you were even thinking of going into an MBA, you were also prepping for law school as well. So what was the mindset that you were going through at that point? What were the steps of determining, okay, I've been at IBM for how many years, and now you're thinking MBA, law school, why both? And what were the steps?
I think I love to learn and I love to grow personally and also professionally. I think if you don't grow and you stay stagnant, I don't think that's positive really necessarily to yourself, and you kind of doing a disservice to yourself and your organization and the people and your friends and everybody you're working with. So when I had been in IBM for a number of years, I was starting to feel that I wasn't getting as much personal development as I feel I could have been getting, and the interest in what I was doing was starting to deviate from what I felt I was really starting to get a lot of other interest in. So one of my co-op terms during school before I joined IBM was on the Bank of Montreal trading floor, and that was during the dotcom bubble of 2000, as well as the collapse of 2001. And I found a lot of excitement and a lot of energy and a lot of I started discovering that passion for really trying to figure out how businesses work, what gives them value, and how do we actually identify whether going forward that a company was going to be able to drive value with its strategy that it's currently implementing, with its different growth opportunities that it's seeking. So I think it was during my time at IBM that I really started getting really involved in looking at companies, not necessarily stocks specifically, but looking at companies and how they work. And I started reading a lot of papers and journals, and seeing success stories of how a lot of entrepreneurs were able to build businesses just simply with an idea and executing on it. So it was around that time where I felt like, okay, I can sit at this desk at IBM and continue to have a decently good job, a stable position, a little bit of growth here and there, but not a lot. Or I can go outside of my comfort zone and really find something else that I was really interested in. And at the time, I was interested in, as you mentioned, both law and the MBA. And law was always interesting to me because I loved that aspect of it. I took law courses in university. That was something that I really feel like, I did have a little bit of passion for. So I started looking at writing the LSAT and see if it was possible at that time to really make that switch into law. while at the same time also looking at the GMAT to figure out whether I can actually, find a way to learn more about the business side of the world. And honestly, I didn't go the law school path was because it was going to take too long. I would have to go through, a few years of law school, then go through the articling process, and then really figure out whether I want to specialize in something. Whereas with the MBA, I felt that I knew exactly what I would do if I were to go into that route, that I was interested in learning to be a stock analyst, into a portfolio manager. That was going to be the path that I was going to follow. I knew that for sure. It wasn't going to be consulting. It wasn't going to be some marketing or healthcare specialization. I wanted to be a portfolio manager. So I think that was more clear to me. It was a clearer path and a more direct path. And that's kind of why I decided to really go to Rotman and do my MBA there.
Got it. And in passing, you did mention that in hindsight that you should have gone to a U.S. school. What made you think that? What was there like a specific instance?
I think it was just the opportunity. There wasn't a specific instance really where I felt like, oh yeah, I should have done the U.S. school. It was more in hindsight, looking back that, while I think Rotman is great, there's nothing bad I could say, because I think Rotman has done an exceptional job of really growing its MBA program, especially over the last 10 years, expanding, doubling its class size. When I was there, Dean Roger Martin did an exceptional job of really building the Rotman brand. And I remember us consistently moving up the various MBA school rankings when I was there, and I was very proud as a student. But I think really Canada is a very small market. It's just very, very small. And really, if you were looking to do finance, there's really just Toronto. Maybe a little bit on the West Coast, but really just Toronto. Maybe Montreal to a smaller extent, but it's very concentrated here. And I felt that looking back, the U.S., there's so many more larger firms, so many more different types of organizations. The Canadian traditional landscape, the investment landscape, tends to be more conservative. There's definitely a lot more different types of innovative offerings and innovative strategies out in the U.S. For example, a lot more hedge funds, a lot more venture capital, private equity type businesses that are still traditional finance, but they might be tapping into very different markets. And I think Canada as a whole was still, at the time when I was kind of joining the Bay Street, was still so focused on the sectors that it knows. So mining, energy, financials, and that's it. Canada, the Canadian market was made up and is made up of those major sectors. There's very little healthcare. There's very little technology. Consumer staples, discretionary. There's very, very few of those industries. Whereas the U.S. market was significantly better. So I felt that if I had kind of did my MBA in the United States, it may have opened my eyes more to the different types of roles and firms that I could have been joining. Versus Canada, where the market is very much dominated by the 5 big banks, and there aren't that many independent firms really left. A lot, I just came from Century, who was purchased by CI, and then the independence is starting to really fade out too. So I think there's a lot more independence, in the U.S. But who knows? I don't really regret it. I think it's just something that I look back on, thinking that maybe things would have been a little bit different if I considered doing an MBA in the U.S.
Yeah, and it's true. I think from my experience as well, it's been very obvious that we also have a very somewhat, I think, unique kind of also the investment market as well, where we have giant pension funds which practically run most of the private investment deal flow. And it's weird because the Canadian private pension funds and investment funds, they have a great reputation just globally as just being very prudent and very well done. But it's just, it is weird that it's still kind of a government entity that is doing all this, and it's not private companies that are doing it. And so it does change the game to some degree, and also the kind of learning and also progression that you could see. But obviously, you did well for yourself. And despite going from that technical background to something that was completely different in finance, amidst the great financial crisis, I honestly was very surprised when I heard that people would say that, oh, if you come from a technical background, you won't be as successful, because I think nowadays the world's kind of turned their eye and said, yeah, we want more quants. We want people who are computer students. When I was in my previous role, we were specifically looking for people who had mathematical backgrounds, and people were more aware of, I want someone who can process and crunch data, build models, all that. Do you think you were just way too early for the times?
Yeah, I think the industry has changed a lot. I mean, this was 10 years ago, over 10 years ago when I was looking for a job on Bay Street. And I think that was at the time where I think there was starting to be more focus on those that came from a technical background. Instead of say, you had to, had a finance or investment banking background, and you had to have some kind of economics or commerce degree. So I think a lot has changed, really, and I've seen that really evolved in the last 10 years. So even when I was at IBM and then later on at Century, we were starting to look outside of that scope too. Looking to recruit those that actually have an engineering background or a computer science background, because those with that type of background brings a different set of skills, bring possibly a set of different types of intangibles, and I think most importantly brings a different perspective. Someone who wasn't just trained from the ground up as an economics major to a finance major and then move on to a role in banking or in an analyst role, but whereas someone who came from a completely different background, like comp sci or even healthcare or a consumer background or even science background, it gives a completely different perspective, especially from the buy side investment standpoint. I remember one of the analysts at Century actually came from a health sciences background, and he was looking at industrials, infrastructure type companies, and he did very well in it. He took a very different perspective. He went from a very different route, went and did his CFA, and got a role on the buy side. I think definitely nowadays the industry has evolved to really looking outside of the traditional commerce degree and really embracing everybody from different backgrounds who could add a very different perspective. So I think when I was coming in there, they were starting to do that, but now it's definitely a lot more prevalent.
Yeah, I honestly think even when they study like past grade like investors, many of them come from unique backgrounds. Not many of them actually have a business background. Many actually have a philosophy degree. They're very big in like humanities, psychology. Some were doctors, like Michael Burry was a doctor. And I think it's just, like you said, it's more the industry is actually opening their eyes up to realize that, we need people with different perspectives. And in my previous work too, people were PhDs from microbiology, rocket scientists, and the ability to, I think and have diverse perspectives, it's so essential, because essentially investing is a game of being able to think in a very different way from other people. You have to be contrarian to actually make money, and you can't do that unless you're multidisciplinary in your thinking. And for you, it seems that you also broke apart from that traditional also stigma of, if you're a comp sci person, you're probably introverted, because you told me about how you had 120 coffees in like 3 months because you just went through the whole alumni database. And I think I resonated with that so well, because for me as well, despite being a business student, I still didn't fit the stigma of being a finance background person to get into the investing role. So I met a ton of hedge fund managers and buy side people, but definitely not as many as yourself. So how did that mindset come about to actually build these relationships? And you also did emphasize it's not networking, it's actually building relationships.
Correct. Yeah. I think I understood exactly what it took to kind of get a role on Bay Street. It's such a relationship driven business, and having come from IBM, I didn't necessarily really know how important that was until I started really my networking process during the MBA. And the tech sector is, at least traditionally, was very siloed. You as long as you have a degree in computer science or engineering or software engineering, and you have the credentials to back it up, you put your resume into a pile, and you're likely going to get a job. There was enough demand for your expertise that there wasn't really that much of a need to say build relationships and try to figure out whether you can get a job somewhere because you know somebody else. It was actually a lot more based on just strictly, do you have the certifications? Do you have the training? Do you have the practical expertise to do it? If you do, we want you because you're just literally another cog in the wheel to keep the engine going. And there wasn't really a lot of emphasis on that, on the relationship building part. So when I started really figuring out, how do I transition from a computer scientist into, a stock analyst, a portfolio manager? Well, first of all, I needed to meet these people. I did not have any of those personal connections. So I started combing through the alumni database, looking for PMs, looking for analysts, and really getting a sense of, what is this really even a job that I want? Let's have that due diligence. Let's do that due diligence. Let's talk to these people, get to understand the role, the day-to-day, the career trajectories. Do they actually like their job, or do they just like it because they're getting paid, right? So throughout the course of a few months, I met 150 different types of people, but all within the same industry, very different personalities, I would say, offering me great diverse opinions about what it takes to be successful in this business. And I think I really enjoyed the networking aspect of it. I think I didn't realize how much I really liked talking to people, and getting an understanding of how they think, how they work. Are they enjoying their current work environment? So I think it was the more coffee I did, the more coffees I did with coffee meetings I did, the more I just kept going, because I enjoyed it so much. And it got to the point where it wasn't really about trying to get a job or make a good name for myself. It was more about really learning about people, and then building those relationships. And which is why I think I was successful later on in really securing a number of job offers, is because I kept maintaining those relationships. Not because I needed to, it's because I actually wanted to. I met a lot of interesting people, and I wanted to keep in touch with them just to see how they're doing, and stay friends and make contacts. And that's how I ended up really getting all of my job offers. It was through these connections, through the networking, and it started really with a coffee. And what I always recommended to Rotman alumni and those in the program when we go for coffee is that to build those relationships, because those are going to be very important over time. And don't think about them as like a meal ticket, because that's not what they are. They should be your personal network, your professional network, those that you can help them, they can help you. Create that kind of ecosystem where you have support from people from different industries, where we help each other. And I think I learned a lot of that, through the course of all that networking that I've done. And, I truly believe that today, like I think I told you, I would never turn down a coffee invitation. Anytime I get a random message on LinkedIn or through an email from like a Rodman student or even an Ivy student to do a phone call, do a coffee, I always say yes, because, I really believe in building out relationships.
Mm-hmm. And yeah, I totally relate with it, because it's the idea of paying it forward constantly, right? Because if you didn't have those people who met you in the first place, you might not be where you are. And I think that's such a valuable thing that people should do to actually build relationships, and also should also give back to if they've done the initial first act as well. And I think the fascinating thing is how fascinating, and also kind of also somewhat expected, in that as you build these meaningful relationships, that if you do the right thing and you can show passion in what you're trying to do, that people will remember you. And you got your Claris opportunity in your first role in like equity research through a previous relationship. The next opportunity at BMO came from that, building up relationships. And how did you have some kind of like system that you were trying to keep inside of your head, where every 6 months I want to reach back out to this person and just remind them, this is where I'm at, just wondering how are you doing, do you want to grab a coffee? Like, as your network grows, as you've met like 150 people, how did you maintain all that? And I think that's something I'm just personally struggling with as well, because I've been meeting so many people through the podcast and everything, and I want to keep in contact with everyone, but also not everyone's busy. And so I don't want to constantly message them and say, hey, do you want to catch up again in every like 3 month periods? So what was your kind of system?
Yeah, I had a very low tech system initially. It was a spreadsheet. It was a very simple spreadsheet where I tracked every single one of my meetings. I dated it. I have comments in terms of how that meeting went, types of conversations that I had with that particular person during the meeting, whether I felt that there was any rapport, whether I felt that there could be a potential opportunity to really follow up and maintain that relationship. And I kind of ranked that accordingly. And then I will also mention in that spreadsheet whether I should be following up within like a 3 month time frame, a 1 month time frame, a 6 month time frame, a 1 year time frame. So it's kind of a self-created ranking system that I have for a long time. I actually used that spreadsheet for a very, very long time. And then I think it was around that time where LinkedIn became a lot more, user-friendly and more useful. So that's definitely a tool that I rely on a lot more today, where I would actually probably on a kind of a monthly basis or even 1 or 2 months basis, I would actually look through every single one of my connections and look at, whether someone had started a new role, they had changed jobs, whether someone, moved to a different city to work, someone I haven't talked to for a long time. And I would actually make a point of reaching out, someone recently that I knew, switch a different role. So I would make a point of sending a message and say, hey, how's it going? Let's chat. Let's grab a coffee. In fact, yesterday, one of my former co-op students, messaged me. I haven't talked to her for maybe a year or so. She has just got an offer from, one of the largest pension funds in the country, and then she's coming to me for a reference. So I think LinkedIn has really turned into such a useful tool for everyone to stay connected professionally, to be able to stay in touch with people. So my system nowadays is just I actually go through that list pretty regularly, and be able and take the initiative to reach out. And I think a lot of the times people don't do that, despite the fact that we're all busy people. I think we should take our time, 1 day a month, to really look through our Rolodex of contacts, to see those of us that we had meaningful relationships with in the past that we haven't talked to for a long time, to really take that effort to reach out. I mean, it only takes a minute to send a quick message to somebody that you may not have spoken to in the last year and make that reconnection. And I think, a lot of us sometimes are just too absorbed in our own day-to-day that we're neglecting to build that and maintain that relationship. So that I'm guilty of that too, and I would like to do more of that. But that's something that I really would encourage, everybody out there to keep and build and maintain those relationships.
Yeah, definitely. I'm 100% on board with that as well. And so through those building of relationships, you get into the finance world despite the odds, and eventually move into the buy side, the green grass, where you quote unquote, where now you get to be a portfolio manager, you're managing funds, and for me, when I got there, it was like, nice, I got the dream job, I can retire here. And I'm wondering, did that go through your mind as well? And when did the kind of curiosity and the shift start happening again?
Yeah, when I was hired at Century as an associate portfolio manager, I was like, wow, this is it. This is I worked so many years to kind of get to this point, and now I'm on a team that I really love, on a mandate that was very exciting. It was global equities, covering technology, industrials all across the globe, and it was just so very, very, very exciting. And even actually, till the day that I left, I was still pretty passionate about what I was doing. I really enjoyed looking at companies, trying to figure out whether the strategies actually provided value for the shareholders. I love having meetings with the CEOs and CFOs, really get an understanding of their view on their businesses, and attending global conferences every year, really get a sense of what other investors are thinking. Hear from senior management teams of other companies like Alibaba, Facebook, and Alphabet, and Qualcomm and Cisco. So I really did enjoy that, but I think it got to the point where I felt that looking at companies, seeing how they work, I was doing it from the sidelines, and I was reaching a point where I feel like I want to be a part of that. I want to learn how to, start something from scratch, how to build something, build a business into something that I could be, saying that, I did that. Rather be kind of a third party standing on the side, looking at financial documents, looking at presentations, talking to the people who actually build these businesses, to actually be the one that could participate and start one. So that's when I really started thinking to myself whether this entrepreneur bug was really starting to bite, that I really should use the rest of my life to really figure out, do I want to sit in this desk and evaluate companies rather than just participate and start my own and start running my own business. So that was, that was kind of that clicking point where I felt I had that itch to really do something a little bit different. So I started kind of looking at potential opportunities to join organizations or even come up with my own ideas to figure out, is there something I could do? And as luck would have it, I ended up connecting with Louis Bateman, who is the CEO of Coin Capital. And at the time, he was looking for a partner to build out the Coin Capital or asset management business of Coinsquare. And we just clicked, in our initial conversation, where it was simply, I was the right fit, he was the right fit, the business was the right fit, the model was everything that we wanted to do. It was something that was disruptive to the space. We're looking to launch not only traditional technology funds, but also cryptocurrency funds and different types of offerings. And it was just so exciting to be able to jump into something from the ground up and see it come to fruition. And yeah, it's just that excitement of being able to participate in the development and growth of something rather than be watching on the side.
And yeah, I remember you told me how your interview with Louis was only like an hour and a half, and after that, you guys just practically knew that, Louis was saying, "Yeah, I want you to come work for me." But to get to that kind of quick decision-making point, I'm wondering, did you have a prior mental model that you had already kind of built out from maybe like another 120 conversations where you were kind of just ruminating over, okay, this is the ideal, this is the dream case. So then when you actually came to Coin Capital, like met Louis, you knew exactly it met up.
I think I'm always thinking. Like, one of the things in my mind just processes nonstop. Like, sometimes I wish I could actually shut it down a little bit, but I'm always thinking. And every day I'm thinking, how do I grow personally? How do I grow professionally? How do I make those around me better? How do I make the world better? So those are kind of things that I think about pretty much every second of the day. And I also know that, there are steps to get to certain things. Like, if my end goal was to make a significant impact to the world for whatever reason, however way to do it, there are probably steps to doing it. I'm not just going to wake up the next day and all of a sudden I'm making a meaningful impact to the world. There are likely steps to that. So, I think right now I when I started looking at expanding outside the buy side and looking for ways to build something on my own, I think I was trying to figure out, where can I actually do that? How do I develop my skill sets for that? Is it a trial by experience? Is it a trial by fire? And I felt that, having that conversation with Louis and really digging into what, the plan is, how we're going to change, the way that, the world works. There was just so many things I could learn. I could feel in that 1.5 hour conversation that there was just so much learning that I could absorb, that, there was no question that I was going to jump at it. And, despite how hard it may be to leave, a nice Bay Street job, I had no second thoughts. It was, the minute that I knew that the job offer was on the table, there was no debate in my mind, because I knew that this is what I needed to do. And there was so much I could learn, working with Louis and building this business from scratch that, nothing was keeping me. There was no second thoughts in my mind. There was no mental model, no external processes. I was just ready to pounce, because I realized at that moment that, there was just so much I could learn, from scratch and building this business. And, a year later, I think, next week is my 1-year anniversary with Coin Capital and Coinsquare. And we've just gone through so much positive, experiences, having submitted our business plans to the regulator, getting registered by the OSC as a IFM, investment fund manager, portfolio manager, exam market dealer. Then a couple of months later, launching our funds, opening the market at the TSX, ringing the bell. And then now we're in full development of other new exciting offerings, doing tons of marketing to really get our brand out there. I mean, we've done so much in the last year that I would have never been able to do or experience if I just kind of stuck with what I was doing, in my previous role.
And I think it's, you kind of say it in passing, but I think I want to kind of emphasize how hard of a decision it could be for many other people to leave something that is a very cushy buy-side job. Like, I still have friends there that still talk about how it's just really hard to leave it when it's practically, if you're good and you stay, you're guaranteed this really cushy, like, millionaire life. And you're seeing, I think, you talked about how you have a North Star and you're constantly following that and constantly keeping that in the back of your mind as you're making decisions. And things have been working out. And I think when I look at a high level, someone could just look at it and go, oh yeah, everything's worked out for this guy. But I can only imagine that there are also just pockets of, like, adversity and obstacles. And so for you, what kind of big failure did it come up to mind where you experienced it sucked, but it was just that kind of tipping point that you needed to just push yourself and become, like, way better?
Yeah, absolutely. And I think I can trace that back to trying to find a job during my MBA to make that career switch. I think that was actually the inflection point in my life as a whole of how if you put in the effort and really focus on what your goals are, that you could do anything. And I think that was when the 150 coffee chats that I did during those few months was not easy. Everybody around me, those that had experience, were getting jobs, getting internships, and I at the time was trying to figure out, is this career switch really going to work out? And there were doubts, but at no point did I stop that focus. The summer internship at the time began in May, and I was still doing my coffee chats in April, trying to figure out, is there a way I can still get something for the summer? And it was just continuous perseverance, like hammering meetings every single day. I'm in school full time at the time, and trying to figure out how to navigate between the studies and then making time to get into a suit, go down to Bay Street, meet for coffee with somebody, make a good impression, and then build and maintain that relationship. And I think there was a lot of failure there because I went through interviews. I did have interviews for summer internship with reputable firms, and I just could not close the deal. Like, I was able to get through the first round interviews, get to the second round, some even to the final round. But at the very end, I end up always losing out to somebody who either had a CFA already or had some kind of great experience or knew somebody. So there was a ton of failure that I went through. Even during the full-time recruiting, I again had probably 10 to 13 different interviews where I got through to the final rounds like 3 or 4 times, still couldn't get that job offer right at the very end. And 4 months before graduation, I still didn't have a full-time job. And then Claris, came around, and I was able to, it was because of relationship. I had built a relationship with an analyst at Claris. At the time, an associate had just left, and she asked me if I wanted to come in for that interview, and I went in through a 3-round interview process. It was still, not a guarantee. It was like you had to go through 3 rounds, and ended up getting that offer. But they wanted me to start right away. They wanted me to start pretty much, that late January timeframe, and I was in school full time. I think I mentioned to you I had to move all my courses to the evening. So I did a full, 12-hour Southside job, then, did classes in the evening, started back at 6 a.m. the next day, and we had earnings season where, I'm up till like midnight, 1 a.m., and I had to go back to work the next day and then go back to school. This wasn't easy, that was some very challenging months and years that I had to really put in to really get to where I, end up ultimately getting to be. And the challenges now that we have is, building a business from scratch is not easy. Building Coin Capital from scratch is not easy. And given that we're in a cryptocurrency space as well, there's stigma, in cryptocurrency, especially given what we've seen in the last couple of years where the euphoria of crypto led to Bitcoin hitting $20,000 US. A lot of it, retail investors jumped in. Then they ended up, losing a lot of their money when the cryptocurrencies end up falling 70-80%. And it's a challenge building, a business that doesn't have any precedents. We are very closely working with the regulators to figure out how to possibly work as a partnership going forward, because everybody's new to this. There's a lot of education that we have to be able to provide to the regulators, to clients, to partners, to really give them a sense of that there's a true opportunity and a true business here that we could actually work together to legitimize, instead of being a stigma of someone who, of people who don't understand exactly what cryptocurrencies are. So even today, we have challenges in figuring out how to really spread the word of what we're trying to do and how this could actually change the world going forward.
And could you give me like an example of how you're trying to make it work amongst all this ambiguity, and like how you're trying to educate people? Is there an example that kind of comes to mind?
Yeah. So we're doing a lot of what I would say right now, educating our retail investment advisor community, in that a lot of advisors in Canada. So I'm talking about some of the branch-owned advisors, like an RBC Wealth Management, advisor, or BMO1, where this is not first nature to them, where you show them a product that they may not necessarily understand, that they may have heard about, but they don't know how to differentiate between, say, blockchain and cryptocurrency. And then what we do is we actually go in with a very open mind, knowing that they don't really understand necessarily technology and the use cases behind it. And we would then, walk through the entire technology explanation of why, blockchain is such an important technology, how crypto and blockchain is very different. I actually give them very simple examples. Look, cryptocurrency is a first use case of the blockchain technology, similar to years ago when Napster, the file music sharing software, was the first use case of peer-to-peer file sharing, and how Napster was also stigmatized back in the day, and now everything that we do today is it's file sharing, whether it's a streaming, whether it's sending files on Messenger or WhatsApp or Facebook Messenger, and that's how we see blockchain and crypto. Crypto is just one use case, but you can understand that blockchain has a lot of use cases and facilitations. So this is a lot of education. We do a lot of presentations. We try to make our brand known. And on a weekly basis, I actually publish a Coin Capital Tech Pulse, where we try to educate our readers and end clients the different types of trends that's happening in technology, things and themes that they should be focusing on. Our first edition was in January, where I talked about use cases in blockchain. Our second edition in February, I was discussing various themes in biotechnology, some of the things that are very exciting in the world today, like CRISPR and immuno-oncology, for example. And then this one coming up in March, I've actually just finished writing it this morning, we'll actually be talking about patents and monetizing patents, and how patents actually protects innovation and further fuels innovation in technology. So I think we're using different types of avenues to really educate everyone in terms of what we're trying to do, what we're about, what the Coin Capital brand really is, and that we should be the go-to technology investment fund manager.
And if I relate back to just how the time is spent, as trying to contrast your time as an investor in public equities now to being an investor and also an operator of still an asset manager, but a different kind of industry altogether, in a sense. Like, as a public equity investor, I would say my time around 50 to 60% is just purely on learning. Conversations with managers, reading tons of annual reports, industry reports, and then maybe about 30% of the time just looking into space, just thinking and ruminating, and 10% just executing. We just call a trade or have a meeting, decide, are we going to buy it? Cool, let's buy it or sell it, etc. Before we recorded, you talked about how most of your days now are very sales and marketing. So how does your time bucket look? And is that the time bucket you kind of expected coming in from such a different role?
Yeah, no, that's a great question. I would say my time today is probably split about 40-50% marketing, trying to figure out what works for our products, educating our end clients and investors, really getting our brand and developing our brand out there. And that's very important, because we are new and our products are different than what's out there. That education is such an important piece. So that's why a lot of my time right now is focused on that. And then I would say another 30% is probably still involved really in the product development side. what are the types of funds that really we should be putting on the market. Is it venture capital fund? Is it a incubator product? Is it private equity? Is it more ETFs that are focused on different types of niches and thematic plays? Is it a cryptocurrency product? So there's a lot of thought that we're still doing today, that I'm doing today with my team on product development. So that's about 30% of my time. And then I would say there's probably another 10% of my time on the operational side of trades, execution, making sure that all of our processes are in place. And thankfully, I have one of our associate director in trading really helps me handle a lot of that work. And then I would say the remaining of the time is really on the strategic side. How do we continue to grow this business? What are the different types of avenues for growth? And we're working with a number of different ideas right now that I think are actually very exciting, which obviously I can't talk about. But yeah, my time is very, very full with a lot of different things. And it's probably what I kind of expected, I would say, when I first started that, because we are a startup, that, one person ends up doing a lot of different types of responsibilities that they may not have expected that they would do. And we're a very lean team as well. So everybody kind of shares into the shared pool of work, but I would say everybody does have an expertise. I have my associate director of trading who handles really the operational side of the business. I have our head of business development who really handles the relationship side of booking us meetings, getting us presentations, getting us out there. Lewis, as our CEO, really works a lot with the strategic side, try to figure out all the different types of partnerships that we could have, potential deals that we could sign with partners, and also participating in the offering. And myself as the managing partner and the PM, really on the marketing, product development side. That's what 70% of my time is really focused on.
And on the theme of expectations, as we're also kind of wrapping up to the end of our interview, if the 20-year-old Francisco who had just accepted that offer from Big Blue were to look at what you're doing right now, what do you think that Francisco's emotional reaction would be? Would it be that kind of expected it, or what else do you think is going to be going through that Francisco's head?
Yeah, no, another great question. I think the 20-year-old would be very surprised where the 40-year-old is sitting today, and a lot of it was because every journey, every different types of experience I had, every different role that I was at, shaped the person that I am today. Right? If I didn't go to IBM, I may not have gone to done the MBA, may not have made the career switch. If I wasn't at Century covering technology and really reinvigorated my view on how entrepreneurs and people are really building different companies now, I may not be here today as well. So I think that journey was so important. I wouldn't change a thing, to be honest. I might look back and say, yeah, maybe gone to a US MBA school, but honestly, I wouldn't have changed a thing, and because I wouldn't be the person that I am today and the lessons I've learned today without all those different pieces, and all those different relationships that I built throughout the years as well. And who knows what's going to happen? The 60-year-old might look back now and thinking that, wow, what were you thinking back then? So it remains to be seen. Hopefully there's still a lot of stories to tell.
Yeah, no, definitely. And I think this is a great place to kind of end our interview. And so before we close off, I wanted to give you an opportunity to kind of help our listeners guide their way into, if they want to learn more about Coin Capital and what you guys do, how could they learn more about it? Where should they go?
Yeah, absolutely. So our website is www.coincapfunds.com, where you can learn about product offerings and get an understanding of what we're trying to do. And I'm always happy to do a coffee chat. So any of Dan's listeners, if they want to reach out to me through LinkedIn, send me a quick message if you want to learn more about the business. I'm sure we can figure out a time where we can meet. And if you want to learn more about the funds, myself, or anything else about the industries that I've been in, I'll be more than happy to have that conversation.
All right, excellent. Thanks for that offer, Francisco, and thanks so much for coming on the podcast and sharing your story.
Thank you, Dan. Thanks for having me.
All right, bye.
So thanks for listening to the podcast. If you enjoyed what you heard, please check out other episodes and don't forget to subscribe to stay up to date for the future episodes. Also, I would really appreciate it if you would leave a review on iTunes, Google Play, or Stitcher, whichever is applicable to you. To see past episodes, you can go to oldmandan.com/podcasts. Also, you can sign up to my weekly newsletter on my blog, oldmandan.com/newsletter. You can stay up to date with future podcast episodes that way, and included in the newsletter are my book reviews I write, my weekly article related to the domain of self-development systems, as well as 7 things I learned throughout the week on being healthy, wealthy, and wise. Finally, special thanks to icons8.com for allowing me to use their music Tiny People on the podcast. Great. I will see you all next time. Take care.